Good morning, Paul Georgie from Allendale. It's June 1st, Friday morning, and we've been bombarded with the economic data throughout the world. China, first of all, a PMI number came out at 50.4. That's the lowest in 3 years. We had very poor PMI numbers come out of UK and the EU this morning. Initially, we've seen pressure in the commodity markets for that reason, and since that time we've had the U.S. economic data come out, had new payroll numbers of 69,000. The trade yesterday at one time was looking for 150,000, so a very negative number there. The unemployment at 8.2%, that's up 0.1% from last month. The export sales was out also this morning. Pretty dismal number on corn. 450 to 650 was what the trade was looking for. It came in at 282. The beans, 418 was the export sales number. That is at below the low end of the range of 450 to 700, and wheat was below the low end of the range of 350 to 500. Came in at 300,000 tons of wheat sold. So a lot of negative news starting out today, and let's hope we can get it all out of the way at one time. The Paris wheat under pressure here overnight as the UK or the Ukrainian and Russian areas have got plenty of moisture, and now Ukraine has said that they're looking at near record grain production this year. Argentina growers have been in the largest farm producing province in Argentina, has said that they are going on a 9-day strike of selling agricultural products as a way to boycott the new bill that will increase taxes. That has and could be supportive as that slows down exports out of the Argentina region. We've got commodity funds rolling positions here that could weigh on nearby contracts as they roll out of their long positions in the July contract and move them out to further contracts. And we've got that roll. There's many funds that have started already, but the big funds, Deutsche Bank starts on Monday. Goldman starts on Thursday, beginning their roll that usually lasts anywhere from 3 to 5 days. We didn't get enough rain for a lot of areas. There's certainly some areas that got missed. However, the forecast is for about 55% of the Corn Belt to get more moisture here over the next 3 to 4 days as we go into early next week. That is also weighing on the market here this morning. The cooler temperatures is certainly benefiting the crop at this point in time. So that's about all the negative news that we've got to share here this morning. We do have the spreads changing and coming back into line with the cash markets still strong. Interior markets anywhere from 50 to 60, 65 over the July contract. That's providing some support to the July futures here this morning, and seeing spreads, the bull spreads, come in line and gather some momentum here after a tremendous amount of liquidation going into the end of the month and the last trading day of the month, which was yesterday. The bright spot we have here this morning is the livestock trade. Cutout values in choice beef were up 31 cents. Select was down 105. Pork cutouts were sharply higher yesterday, again of up 117. And we've seen futures rally sharply yesterday, especially led by hogs. Hogs took out some key downtrend chart resistance levels, and if we can keep the hog and livestock markets separated from some of the negative news that we're seeing in other markets today, we would expect a firmer close there going into the end of the week. The cash cattle trade was higher yesterday in Nebraska, traded 194 there. However, there was some early trade in the south at 121, which would have been $2 lower than last week. We expect that we could see some more trade there at steady to higher money compared to the last week number today. So we've got a lot of things to digest here this morning. A reason to stay in touch with Allendale's research. Just give us a call here. We'll try to answer any questions you've got. You can reach us at 800-262-7538. We wish everybody a very successful trading day, and I will talk to you on Monday morning.